Hello and welcome to Unacademy, a one-stop destination for all the English medium civil service aspirants. Welcome to another session of Economy Weekly Recap, wherein we take up important economy-related articles from different newspapers and analyze these articles. And in this video, this is the list of the articles that we'll be analyzing. Now, before I start the discussion, a very important announcement. For the English medium civil service aspirants who wish to appear in Civil Services Examination 2025, we'll be launching a Triumph badge. The badge will start from May 30th, 2024. The faculties who will be handling the sessions will be Sarmat sir, myself, Abhishek sir, Chetan sir, Mukesh sir and Himabindu ma'am. The classes will be live. Instant doubt resolution will be provided to you. Separate sessions will be taken for current affairs coverage. Mentorship assistance will be provided. Study materials will also be provided. Those who are interested, the prices have been cut down to 29,999 rupees. Please check out the details. In addition to this, I received a lot of mails from the students, and a lot of students also comment in the videos asking for the PPT that I'm using as well as the summation of the articles that I'm discussing. All you need to do is scan the QR code. You will be redirected to our Telegram channel. Join the Telegram channel. The PPT that I'm using and the summation of the articles that I'm covering will be uploaded in the Telegram channel. Now, with this caveat, let's start the discussion. The most important article is Reserve Bank of India announcing transfer of surplus of over more than 2.1 lakh crore rupees to Government of India. What are the concepts involved? What is the importance of the article? Let's go point by point. Reserve Bank of India, just like any entity, incurs expenditure and earns income. It spends money, it earns money. For example, it will spend money on printing of currency notes. It will spend money in order to provide basically the salaries and other expenditures of its employees. It will also pay commission to various banks which will provide banking services to fulfill to the functions of Reserve Bank of India. On the other side, RBI also earns a lot of income. It will earn income by providing loans to various banks, for example under repo rate. It will earn income by providing the services to the government. It will earn commission on this, etc. There are sources of income and there are ways that the Reserve Bank of India will spend money. And because the income is greater than the expenditure, the amount of money earned by RBI is more than the money that you spend, the excess is called as a surplus. For a common man, generally what we say, we call this as a profit. But please remember, RBI is not a commercial entity. RBI is not a company which will focus on profits and will run behind only profits. RBI is a regulator and one of the most important regulator in Indian market. And the excess amount of money that they earn compared to expenditure will refer to this as surplus. Part of the surplus, it will be kept with Reserve Bank of India. RBI will keep this with itself, and the remaining amount, it will transfer to Government of India. Couple of years ago, there was a lot of friction between the government as well as RBI as to how much part of the surplus should go to the government and how much should be left with Reserve Bank of India. To address this issue, there was a committee which was appointed, Bimal Jalan panel. And based on the recommendations of the Bimal Jalan panel, now the surplus is divided between RBI as well as Government of India. There is a formula which has been provided. According to the formula, the money will go to RBI as well as Government of India. Now, according to this particular formula, RBI has approved, and when I say RBI here, Central Board of Directors, CBD. And before I go forward, here is the first assignment to all of you. Under which sections of Reserve Bank of India the CBD is set up, and what is the number of people maximum approved number of people within the CBD. So according to the CBD now, which has approved this, 2.1 lakh crore rupees will be transferred to Government of India. Now what is the importance of this? And before understanding the importance, how is that RBI announced a surplus transfer of more than 2 lakh crore rupees, whereas the budgeted amount by Government of India in the budget was just around 1 lakh crore rupees. Almost more than the double amount has been announced by RBI. How is that possible? Listen to me very carefully. The first reason why RBI is able to transfer such a huge amount of surplus to Government of India, the first one, RBI has increased repo rate in the last 2 years. Right? That is repo rate, the policy rate. It has increased this policy rate in the last 2 years. Right now the policy rate, that is repo rate, stands at around 6.5%. But May 2022, RBI kept on increasing repo rate in order to control the inflation rate in the domestic market. And in the last one and a half year, there is a discussion of liquidity deficit. In essence, the banks have become net borrowers from Reserve Bank of India. So on one side, RBI has kept on increasing repo rate, the rate at which RBI will provide loans to the banks, and on the other side, the banks are experiencing liquidity deficit, which means they are borrowing from Reserve Bank of India. So as a result of this, the earnings under this particular tool for RBI has increased. First reason. Second reason, RBI has also invested a lot of money in foreign government bonds. Remember this. RBI has invested a huge amount of money not only in Indian government bonds, but also on foreign government bonds. Essentially focus on the government bonds of USA, the treasuries of Government of USA. And in the last 1 year, the returns on the treasuries of Government of USA have kept on increasing. And if you're wondering, sir, how is that possible? How is the returns increasing there? Just like RBI, even in case of USA, the Federal Reserve has increased interest rates. They have maintained a high level of interest rates. So the earnings on the investments of treasuries in case of Government of USA has increased or has added to higher revenues for RBI. The third very important source, RBI intervenes in the forex market. That is, in order to stabilize rupee value against the dollar, RBI, as per the requirement, will either sell dollars and purchase dollars. Again, it is as per the requirement. Now imagine, RBI will basically purchase a dollar when 1 rupee or $1 was equal to 50 rupees, and it will sell the dollar when $1 is equal to 60 rupees. So in essence, by conducting transactions in the forex market, by intervening in the forex market, it is also able to earn certain amount of money from these transactions. So the forex intervention, the intervention in the forex market has also added to the higher income sources of Reserve Bank of India. So these are the three very important sources which have contributed to high earnings of RBI. And based on the formula, RBI has maintained a CRB, contingent risk buffer, and even after increasing the contingent risk buffer to 6.5% of the total value of the assets in the balance sheet, RBI is able to transfer 2.1 lakh crore rupees to Government of India. And before I go forward, please make a note of this. The idea of a contingent risk buffer being maintained in the range of 5.5% to 6.5% is again the recommendations of Bimal Jalan panel. One of the recommendations of Bimal Jalan panel. Now what is the importance of this news? If RBI is giving 2.1 lakh crore rupees, what is the importance? Point number one, it will help in controlling the borrowings of the government. At least that is the thought as of now. It will help in controlling the borrowings of Government of India, because Government of India has budgeted more than 14 lakh crore worth of fiscal deficit. So this particular amount of 14 lakh crore rupees was arrived at considering the dividend or the surplus transfer of 1 lakh crore rupee. Now the surplus transfer is more than 2 lakh crore, which means the Government of India's receipt source have increased. which should also mean the borrowings of Government of India should be controlled to a certain extent. Second, if Government of India continues with the same value of borrowings, this should help in at least incurring other expenditures such as capital expenditure. This should help in increasing the capital expenditure for the government. And various experts argue that if government will reduce its borrowings, that is the fiscal deficit will come down, the Government of India's targeted fiscal deficit can be reduced at a much higher level, that is, the FD can be reduced much lower compared to what has been the target, what has been set as target in the budget. In addition to this, if borrowings are reduced, automatically the pressure on the interest rates in the market will come down. So these are some of the important outcomes that we are expecting from the transfer of such a huge amount of surplus from RBI to Government of India. So this is basically the discussion related to the first article. Very, very important. Please remember. Now, based on this, I have given a question. Consider the following statements regarding Reserve Bank of India. First one, Section 47 of RBI Act provides for transfer of surplus to government. Absolutely correct. It is under Section 47 of RBI Act of 1934 that RBI will calculate how much is the surplus, transfer it to government. First one is correct. The Bimal Jalan Committee was set up to recommend ECF. Now what is this ECF? Economic Capital Framework, ECF. And that is true. And that is basically the same concept of giving recommendations to distribute surplus. How much should be the economic capital held by RBI, etc., etc. Second statement is correct. Third one, as a result of the committee recommendation, RBI has discontinued interim dividend practice. Now what is this idea of an interim dividend? Earlier, please understand, accounting year of RBI was different compared to accounting year of Government of India. Government of India even today follows the accounting year which starts from the 1st of April, ends on 31st of March. That is a financial year. But earlier Reserve Bank of India had an accounting year which would start in the month of July and would end in the next calendar June. That is basically 1 year. The accounting year was different. So when the accounting year of RBI is different compared to, let's say, Government of India would close its accounts books on 31st of March. But RBI will be able to calculate the correct amount of surplus, transfer it to government after the end of June only. So there was a problem. And in order to address this particular problem, RBI used to announce interim dividend. That is even before the financial year. I repeat, even before the financial year of Government of India is over, certain amount of dividend would be announced that was called as interim dividend. Now because of the recommendation of this committee, we have discontinued the concept of the different accounting year for RBI. We have made the accounting year of RBI same as the accounting year of Government of India. There is synchronization. And because of this synchronization, the same financial year is followed and there is no need for announcing the interim dividend now. So third statement is true. All the three are correct. Right option for the question will be option C. Right, all the three. Now let me go to the next article. Prepack insolvency, a success for 5 companies. This has been there in the discussion for multiple times in the last couple of months. What is this Prepack insolvency resolution process in the first place? Whenever you talk about insolvency resolution, you will come across IBC, Insolvency Bankruptcy Code. Under IBC, please understand, currently we follow Corporate Insolvency Resolution Process, CIRP, Corporate Insolvency Resolution Process. But during pandemic, Government of India introduced one more type of insolvency resolution process, which is famously referred to as Prepack Insolvency Resolution Process, PPIRP. And what is this Prepack Insolvency Resolution Process? Government of India felt that the time taken under CIRP is higher, the cost of conducting CIRP is higher, the documentation process is also very lengthy. So it's a time consuming and very lengthy process involving lot of expenditure. But there are certain entities in the market which cannot go through the CIRP process as a de facto process. That is, you cannot directly drag these MSMEs, to be very precise. You cannot drag these MSME defaulters through CIRP directly. So what has to be done? We will provide one more alternative solution which shall be used first before going for insolvency resolution process. And that basically is referred to as Prepack insolvency resolution process, PPIRP. Now what is the difference between PPIRP and CIRP? The difference is here either the creditor or the debtor can approach NCLT. Either of them can approach NCLT. Whereas here the borrower, that is the debtor, has to initiate PPIRP. Point number one. Point number two, the time provided under CIRP is 330 days. Now some of you will basically say, no sir, you are wrong. It is 180 days. Some of you will contest that. And some of you will contest the earlier person and say, no, you are wrong, it is 270 days. My dear, when it was actually launched, it was 180 plus 90. So totally 270. But later it has been extended by 60 more days, 180 plus 90 plus 60, now it is 330 days. 330 days. Whereas here it is 120 days. 330, 120. Here the committee of creditors is appointed. The management of the company is given to insolvency resolution professional. Here the debtor initiates the process, negotiates with the creditor. They will arrive at an arrangement, and this arrangement is basically submitted, offered to NCLT. And the NCLT will look at this and give the approval. Again, provided every process has been followed correctly. So this is a much easier process, less time consuming. And the documentation work in case of the second one is much lower. And that is the precise reason Government of India has allowed only the MSMEs, micro, small, medium enterprises, to go through the pre-packaged insolvency resolution process. Now why this is called as a pre-packaged insolvency resolution process? Before we approach NCLT, there is a negotiation between the creditor and the borrower. Creditor and debtor, they arrive at a resolution. For example, many of you have this doubt. Sir, what kind of resolution are we talking about? Let's say you are the owner of a company. I am providing certain raw materials to you. I am an operational creditor. Rather than ensuring that, or rather than pushing for payment within 45 days, what if I give you extended time period? If I allow you to make payments for the same raw material, but at a longer duration now, take more time, that will give you more time period to basically address the issues of repayments. That will help in basically continuing the operations of the company without having to sell off or close the company. That is one way how these kinds of out of the court settlement. In fact, the experts will use the term PPIRP is like an out of court settlement. There is an agreement between the creditor as well as the debtor to address the issue of repayment, right? Resolution is provided. So this is the discussion regarding CIRP as well as PPIRP. Now it's not new system. That is the second one. It's not new. Pre-packaged insolvency resolution process was introduced 3 to 4 years ago by Government of India. But over the period of time, the issue has been that lot of MSMEs have not shown interest to approach this particular process. Lot of creditors also have not shown interest to adopt this particular process. And as per the latest data which has been published, only 10 cases, only 10 applications under PPIRP have been taken up. And out of the 10 applications, for 5 applications, resolution has been provided. Insolvency resolution has been provided. And the recovery rate for these particular 5 applications is around 25%. The recovery rate is around 25%. And many of the experts are saying, if the recovery rate is around 25%, this might further dent many of the companies, or let's say many of the creditors, in approaching this idea of a pre-packaged insolvency resolution process. Reason being, under CIRP, the recovery rate is somewhere around 32%. Mind you, recovery rate is around 32%. Whereas in PPI RP, recovery rate is around 25%. So if you are a creditor, you have given a loan to me, I'm an MSME unit, and if there is a need for resolution now, you would prefer CIRP rather than PPIRP, because the recovery rates there are much better compared to the system that is mentioned here. So around 5 entities have got a success of insolvency resolution from Prepack IRP. So this is in a nutshell what is given in the article. Based on this, let's solve a question. Consider the following statements regarding pre-packaged insolvency resolution process. The time limit for PPIRP is 330 days. No, it is 120 days. All the companies are covered under this? Absolutely wrong. Right now, MSMEs are covered under this. MSMEs are covered under this, not all the companies. What about, let's say, larger companies? If they default on the repayment, can they use pre-packaged IRP? Absolutely no. They will have to go through CIRP. Third one, the minimum default for the PPIRP is 1 crore rupees. It is 1 crore rupees. Absolutely wrong. It is not 1 crore rupees. It is set at 10 lakh rupees. It is set at 10 lakh rupees. Third one is also wrong. All the three statements are wrong. Right option for this particular question will be option D. None of the statements are true. Now, third article. At WTO, India still opposes plurilateral pact on investment. What is the story here? China back in the year 2017 proposed an investment proposal, came out with an investment proposal. The name of the proposal is Investment Facilitation for Development, IFD, Investment Facilitation for Development. But please understand this, whenever you talk about WTO, World Trade Organization, there can be two types of agreements. One is multilateral, where all the member countries will come together, sign the agreement, and the other one is plurilateral. Plurilateral, where very few number of countries, right, limited number of countries will come together, sign the agreement. And when it is introduced under particular annexure of WTO, the provisions of this agreement is applicable only to the signatories. It is applicable only to the member countries who have signed it. Sir, any example of plurilateral agreement? There is one example regarding information technology, IT. There is an agreement called as ITA, Information Technology Agreement. The Information Technology Agreement is a plurilateral agreement wherein the countries who have signed this agreement, they will have to reduce, eliminate barriers, tariff barriers on certain information technology imports. Government of India signed the first iteration. When it was introduced before 2000, Government of India signed it, it is a part of it. And last decade, there was the second round of ITA which was agreed to by many member countries of WTO. India did not sign it. India did not take a part in it. India did not sign to this particular agreement. And that is the precise reason Government of India has been able to target many of these IT products which are being imported, which are flowing into India. It has been able to target them, impose the tariffs. Sir, why is the government imposing tariffs? In order to promote Make in India, in order to promote manufacturing of these products in the domestic market. And against this policy of Government of India, many of the Western economies, many of the other trading partners have voiced a concern. But Government of India says, I am not a signatory to Information Technology Agreement too. And these products which I am targeting now and imposing tariffs, these are covered under the second iteration. These were not covered under the first round. So that is one example which is there in the current affairs. Second example regarding plurilateral agreement. In the month of February 2024, that is in this year itself, WTO adopted one plurilateral agreement regarding domestic services trade. Remember this, domestic services trade. What is this idea of agreement on domestic services trade? according to more than 70 countries. There are more than 70 countries who have signed this agreement, plurilateral by the way. According to WTO, this domestic services in trade, that is the trade in services, involves a lot of cost. It is said that compared to the trade in goods, the cost involved in the trade in services is more than double of it. And now to reduce the cost in trade in services, such an agreement has been signed. And according to WTO, once this agreement is implemented in the member countries who are signatory to this, India by the way is not a signatory. I'll tell you why. If this is implemented, the trade in services, the cost associated with the trade in services is expected to come down by $150 billion. So this is one more example of plurilateral agreement. Now come to the point here, investment facilitation for development. 2017 it was proposed by China. More than 100 countries have accepted to this. India has opposed it. South Africa has opposed it. Why? And what are they trying to do with this kind of an agreement? According to the provisions of the agreement, this will facilitate the growth in the investments across multiple countries. This will facilitate cross-border investment. That is basically the summation, one-line summation of IFD. If this is going to promote investments across countries, why is India opposed to it? Why is South Africa opposed to it? Reasons are simple. Point number one, Government of India is concerned regarding certain provisions in the IFD. That is, there is a provision which says if government has to make certain changes in the policy, first they will have to consult the investors. And Government of India says no, I am a sovereign authority. I will take my own decisions. Why should I consult investors? I will not be consulting, I will not sign the IFD. Point number two, which is generally voiced by many countries now, World Trade Organization functions on consensus. It should function on consensus. And when you talk about consensus, and on the other side you bring in agreements such as IFD, proposals such as IFD, where more than 100 countries have accepted, but all the member countries of WTO have not given consent. So why should you take up an agreement or let's say a proposal like this where there is no consensus of WTO member countries? That is the second reason why India has opposed it, South Africa has opposed it. Third very important reason, WTO was established in order to promote global trade. I repeat, WTO was established in order to promote global trade. The IFD talks about investment. So the contentions of some of these member countries, including India, is that why are we discussing something related to investment under WTO? We should not discuss it. WTO should be focused on promotion of global trade. So these are some of the reasons which have been taken up or which have been cited by India and many other countries not to sign the IFD. And very recently, in the General Council discussions, right, in the committee discussions, again the idea of IFD has been proposed. In fact, the IFD proposal was put forward in the recently concluded ministerial conference, 13th ministerial conference. India opposed it, South Africa opposed it. Now again this has been floated in the committee meetings. So this is the gist of the article provided here. Let me go to the next article. Mobile PLI scheme may be extended beyond 2026. What are the important points? Point number one, Government of India has implemented an initiative by the name of PLI, Production Linked Incentive. Under this, 14 sectors are covered. One of the sector is mobile phone manufacturing. In fact, Government of India says mobile phone manufacturing has been one of the success stories under production linked incentive. We have been able to increase production, attract investment, reduce import dependence. We have been able to even export mobile phones thanks to PLI in mobile manufacturing. Although I am giving you this data, there is also a counterpoint regarding this particular announcement of the government, but that is not the scope of the discussion right now. So Government of India announced PLI for mobile phone manufacturing, and under PLI, the time period is 2020 to 2026. 2020 to 2026, the companies are supposed to take up the 5 years for applying for PLI The 5 years in this duration are supposed to be taken up by the mobile phone companies, and based on their performance under PLI, based on their performance, incentives will be provided by Government of India. But now the contention is that till what time period government should provide incentivization like this. And this is not the first time there's a discussion regarding incentivization for manufacturing in India. Earlier, same argument was being discussed in the context of FAME initiative as well. So the contention here is, can you keep on providing subsidies till perpetuity? That is not possible. You will have to provide the subsidies up to a certain level, then start withdrawing. Now the question arises, what is the appropriate time? When should Government of India decide, enough is enough, I will not provide subsidies? Because if it is too sooner, if it is done very soon, before the activities, let's say before the manufacturing activity becomes mature enough, then you are not going to promote competitiveness in the market. You are going to have a negative impact on the manufacturers. And if it is provided for a very longer duration, then there is a danger that the companies or the manufacturers will get used to the idea of incentivization, and when you suddenly withdraw, they will not accept it. So it is basically a catch-22 situation here. When should we, if at all we do, when should we do it? And that is the reason why there is a discussion now regarding the concept of extension of PLI for mobile phone manufacturing. The discussion is very simple. We will extend PLI for a couple of years. Point number one. We'll extend the PLI for a couple of years. At the same point of time, we will provide certain incentives, we'll provide certain subsidies for component manufacturers. Understand the argument here. We'll provide certain subsidies or incentives for component manufacturers. Sir, why are you talking about components now? Argument is, if I withdraw the PLI for mobile phone manufacturing, we are heavily dependent on the import of components. This import dependence might continue. So what we can do is, we can provide certain incentives for the component manufacturing, let the component manufacturing begin in India, let it stabilize, and then we will withdraw the PLI that is provided for mobile phone manufacturing. So that the supply chain, components are used to manufacture mobile phones, so the supply chain is established, and then we can think and we can decide on removal of PLI which is given for mobile phone manufacturing. So these are certain important points that are being discussed in the article provided here regarding PLI. Next article, United Nations rice tenders, Indian curbs under WTO lens. What is the discussion all about? Very interesting concept, listen now. United Nations runs a program called as World Food Program, UNWFP, World Food Program. One of the largest humanitarian schemes to provide, let's say, food grains. And United Nations functions, or let's say provides this particular food grains under WFP in certain countries where there is issue of food security. For example, now the United Nations says they want to procure food grains. They want to procure food grains and provide these particular food grains amongst many countries such as Cameroon, Togo, Algeria, etc. But when United Nations wants to procure food grains, the role of India will come into picture. What is the importance of India here? India is one of the largest provider of many of these particular food grains. And in recent times what has happened is, government is worried about domestic inflation rate. Government is worried about domestic inflation rate, and being worried about domestic inflation rate, Government of India has imposed restrictions. It has banned export of many of the rice varieties. Many of the rice varieties, the ban has been imposed. In 2022, the ban was imposed on broken rice exports. In 2023, many of these the non-basmati white rice varieties, they were imposed restrictions. There was a ban on export of these rice commodities. Although I am saying there is a ban, please understand, government, whenever they impose the bans like this, on the sideline, government will also enter into agreements with many other countries. Government to government agreements are signed, exports are allowed. But what is the issue here? In the month of February, in the month of January, February, United Nations called for tenders. They called for tenders, that is, they're asking, is there anybody in the global market who wants to sell rice to us? Point number one. Point number two, the rice traders in India approached an authority, Director General for Foreign Trade, DGFT, very famous, approached an authority, DGFT, asked permission so that they'll be able to export these rice varieties, sell these rice varieties to the United Nations. Sir, why are they asking the permission? They're supposed to ask the permission because Government of India has imposed a ban. It is not allowing free flow of rice exports now. So when they approached the DGFT, DGFT has rejected their applications. DGFT has said, no, we are worried about domestic supply. We want to control the inflation in India. We will not allow the rice exports. And that has caught the attention of Western economies. It has caught the attention of Western economies. Why? In the earlier ministerial conference, that is MC12, in the earlier ministerial conference, one of the agreement that was signed or one of the decisions that was arrived at in the MC12 was, whenever the WTO World Food Program will go for procurement of the food grains, whenever United Nations will go for procurement of the food grains, member countries will not impose any restrictions. Is it okay? I'll repeat the statement again. According to the statement of MC12, India agreed to it. Initially, it did not agree. It was opposing it. But later, it changed its position, agreed to it. According to the outcome document of MC12, whenever the United Nations will procure food grains for World Food Program, the member countries shall not put a ban on it. The member countries shall not put any restrictions on such procurement. So now Western countries are asking Government of India, please clarify what is your position. Are you imposing a ban on the export of rice for United Nations procurement? If yes, if your position right now is yes, that you are imposing a ban on that, then does it mean you are not going to abide by what you agreed in the MC12? Please give a clarification to us. Have you reversed your position? Are you still agreeing to that? If you are agreeing, will you allow the exports? What is your position? That is the contention now, which the clarity regarding which has been sought by many of the member countries of WTO from Government of India. So this is basically the gist of the article provided. Now related to the food subsidy, WTO, etc., earlier in the previous year there was a question asked. The food security bill is expected to eliminate hunger and malnutrition in India. Critically discuss various apprehensions in its effective implementation along with the concerns it generated in the World Trade Organization. Whenever these kind of questions are asked, point number one, many of the students are under the belief that the questions will be directly picked up from the book that they are referring to. My dear, please be very careful, especially for GS paper 3 and within that Indian economy. Do not be overly reliant, underline the term overly. Do not be overly reliant on a textbook. Yes, sometimes, once in a blue moon, UPSC will pick up a question directly from a book. For example, earlier, UPSC asked a question regarding budget accounts. That's a straightforward question. A year before that, the UPSC asked the GDP methodology adopted by Government of India. Any book would have given the answer to that. But most of the questions which are asked by UPSC will be purely from current affairs. And to answer these questions, you will have to read a lot of current affairs, update your current affairs. Now, what is the approach to this kind of a question? Food security bill is expected to eliminate hunger and malnutrition in India. Critically discuss various apprehensions in its effective implementation along with the concerns. The food security bill, NFSA, has been implemented now. Under that, we are identifying more than 80 crore people, providing food grains to these particular 80 crore people. You can write certain provisions of the act. In addition to that, you can provide now what are the apprehensions. What are the apprehensions of this particular food security bill? Point number one, what about the revenue expenditure? What about the total expenditure? The expenditure under the food security bill has ballooned over a period of time. This will put a pressure on borrowings of Government of India. Second one is coverage issue. We are using the coverage, that is the population coverage of 2011 census. We are in 2024. So don't you think there has to be updation of coverage? And within that particular population of 2011 itself, there are a lot of people who have, let's say, passed away. It is yet to be updated. People are still taking the food grains on their name. So there are a lot of issues regarding the implementation of food security bill. Now, what are the other concerns regarding its implementation? What if I continue to provide these particular food grains and the peace clause under WTO is withdrawn? What if the peace clause is taken back under WTO? Then I'm going to violate the provisions of Agreement on Agriculture. The domestic support pillar under the Agreement on Agriculture will allow me to provide only 10% of value of production in case of agriculture subsidies. But I'll end up providing more than that. In that case, what will you do? So there are a lot of apprehensions, a lot of issues regarding the implementation of food security bill. Okay, now, next article, very small one. Companies flouted FAME subsidy norms knowingly. The last part of the statement is important. Knowingly. Recently, a panel has given report to Government of India. The FAME initiative was launched by Ministry of Heavy Industries, MHI. Under the FAME initiative, government used to provide certain subsidies upfront in the sense when the company is about to sell, company is to sell the product, that is, let's say, a vehicle to the customer, to the consumer, so that the market price of the vehicles is lower, adoption of electric vehicles will increase. But if a company was to get the subsidies under the FAME initiative, government said they will have to meet certain conditions. They will have to abide by certain conditions. If not, subsidy would not be provided. It is found that during the course of implementation, it has been found that many of the companies have not met the conditions under the FAME initiative. For example, there is a condition where you will have to procure the domestic components. That is, the local content has to be procured in order to get the access to the subsidies. Many companies, it is alleged, many companies have abused this particular provision. They have not procured from the domestic market, but even then they have continued to get subsidies from the Government of India. To investigate this, Government of India had set up a panel earlier. The panel said no, nothing wrong with that, everything is well, all the companies which have got the access to subsidies, they are meeting the conditions. But a new panel was set up. This particular new panel, which was ordered by the central government, has found that the companies willingly and knowingly violated the provisions. They have violated the provisions, and after even violating the provisions, they have continued to get access to subsidies from the government. In fact, last year, Minister of the Heavy Industries had sent a notice to many companies asking them to repay the amount of subsidies that they have taken even after not meeting the provisions or the conditions under FAME initiative. So this is a small update regarding the FAME initiative, and as such, now there is a discussion, should we implement the third iteration of FAME, that is faster adoption and manufacturing of electric vehicles. Should we introduce the third iteration, that is FAME 3? There is a discussion that is happening amongst the stakeholders. So this is the gist of the article provided here. Now before I wind up the session, a very important announcement. I'm pretty sure a lot of you are going to appear for the civil services examination in the month of June. One way to become confident and face the exam head on is to appear for test. Once you appear for the test and you know what kind of questions are asked, where you make a mistake, where your assumptions generally go wrong, etc., you'll automatically build your confidence. And to address this and to assist you people in clearing this exam, we have organized Unacademy All India Preliminary Mock Test on 29th of May as well as on 2nd of June. And these particular tests are absolutely free of a cost. Register for free. And according to the UPSC requirements, the papers have been prepared. There will be a GS paper as well as a CSAT paper on both of these days. Attend the test. And in addition to that, On the next day, very next day, there will be a live discussion conducted by us in the same YouTube channel. Please do join the discussion. So that's it from my side. If you like these initiatives, hit the like button. And if you yet to subscribe to our YouTube channel, kindly do it now. Thank you. Have a great day.